Welcome to your Society's interim trading update for the 2021-22 financial year. Considering the ongoing infection risk, albeit lower than at other times during the last 18 months, the board and management have deemed that it would be irresponsible to convene a physical interim meeting at the current time, and that the cost of a virtual meeting, given potential attendee numbers, was deemed prohibitive. However, we believe it is important to ensure that you, our members, are kept up to date on your Society's performance at what is a very challenging time for businesses in general. The financial year commenced with the country in its third lockdown, which lasted until the 12th of April. This meant that our department store and travel businesses did not trade for the first 10 weeks of the financial year. While we did benefit from the government financial assistance in the form of the job retention scheme and the business rates relief, it was not a substitute for trading, as the lockdown purely slowed down any chances of recovery after the difficult earlier 12 months. While all restrictions to COVID-19 have now been lifted by the government in the UK, the impact of the pandemic is still being felt hard across all of our trading businesses. From the international travel restrictions affecting holiday bookings to supply chain disruption across both food and department stores, with the supply chain issues having been compounded by issues brought about by Exit, for example, shortage of HGV drivers. Set against the above backdrop, the Society's financial performance is broadly in line with the business plan at the halfway stage. In the first 28 weeks of the financial year, your Society's gross takings have decreased year on year by 6.4%, reflecting the 10-week closure of department stores and travel, the ongoing travel restrictions, the lower demand in department stores since we reopened, and in the second quarter, the supply chain disruption affecting availability and consequently sales in our food stores. Should also not be forgot that summer didn't happen in the UK this year, with the weather far below that we experienced last year. And as we all know, our food stores perform particularly well in extremes of weather, both cold and hot. Last year, we also benefited from people working from home and shopping local in our food stores. On a like-for-like basis, gross takings decreased by 5.4%, including fuel in the first half. Now, looking at the business sectors in turn, the food business has recorded a decrease of 7.2% on a like-for-like basis. This figure is being heavily driven by the exceptional level of gross takings generated during the panic buy-in and first lockdown in the first half of last year, and also the lower gross takings in the second quarter of this year due to the supply chain issues referred to earlier, which is meaning that we're not receiving all the product we're ordering to meet our customers' demands. The impact of the very poor summer weather should also not be forgotten when considering food turnover performance. If we drill down into the figures further, the core category business, the tins, the packets, etc., has generated a like-for-like decrease of 8.39%, with last year's level of gross takings being exceptionally high. We are also measuring the 2-year growth to keep in touch with a degree of reality in respect of our performance. On a like-for-like basis, the core category food business has grown 6.42% at the interim compared to 2 years ago, giving some assurance that the business is continuing to grow. The department store business gross takings have been impacted now by 3 lockdowns, which is making comparisons extremely difficult. Gross takings in the department stores grew in the first half by 15.9% over last year, but the closure period last year for lockdown was 13 weeks compared to the 10 weeks this year, indicating the difficulty in getting a true comparison. The 2-year position in department stores is a decrease of 55.4%, but again, this is not true like for like, given that we had a 10-week closure this year. However, even considering the closure, the performance demonstrates how difficult the department store sector is currently, as the number of fashion brands on the high street has fallen further this year, with the failure of Arcadia, with their brands being bought out of administration to trade online only. I have spoken many times in recent years about the declining pool of fashion brands that are now available to department store operators that are seeking partners for their stores, and the loss of Arcadia has depleted this pool further. At the current time, it is difficult to predict when the footfall into department stores will return to pre-pandemic levels. These lower levels of footfall and gross takings is putting further pressure on our profitability in this business area, which is already struggling to return the appropriate level of profit given the asset base prior to the pandemic. The board and management have continued to review closely the department store's operation and are exploring all options to minimise the risk that this business presents to the society over the longer term. Turning to travel, the travel business has had a particularly turbulent 18 months, and the first half of this year has been very similar to last year, with low levels of new holiday bookings, high levels of cancellations and low foreign exchange turnover as people don't leave the UK. This has resulted in gross takings decreasing by 7.5% year on year. However, the true impact is revealed more by the 2-year performance, which shows a decrease of 96.6%, putting the impact of the pandemic on the travel business truly into perspective. Last year, the funeral business did a sterling job at caring for the bereaved in very difficult circumstances, conducting a high number of funerals compared to those that would be conducted normally. Sadly, many people were taken from their loved ones far too early as a result of the pandemic, and this has had an impact on the death rate this year, and consequently the number of funerals that we've conducted in the first half. Our funeral business has recorded a year-on-year decrease in gross takings of 9.1% and a 2-year decrease of 6.6%. In our investment property, gross takings have decreased year on year by 6.2%. The Society's income, or the gross profit, has fallen by 8.9% as a direct result of the lower overall gross takings at the total Society level. The management of gross profit continues to be an area that is heavily focused on to ensure that we both protect the gross profit through robust controls and constantly look for opportunities to grow the gross profit in all of our businesses. With gross profit falling, it's been imperative that operating costs are tightly controlled, especially given the increases that are out of our control, such as national living wage, business rates, utilities, etc. The Society's cost to income ratio has increased quite substantially over last year, from 91.43% to 96.38%. This is not related to a loss of control of operating costs, but instead due to the lower gross profit earned and the fact that in the main our business is one of fixed cost, with very little cost varying with the level of turnover achieved. The Society, however, continues to keep a tight rein on operating costs to ensure that all increases are kept to a minimum, and your board reviews performance on a 4-weekly basis. Management are regularly reviewing all areas of cost to ensure that no unnecessary expenditure is incurred and that value for money is derived from every £1 spent. There is no evidence to suggest that in the short term the pressure on operating costs will fall, and with a potential increase in the national living wage of 5% or more next year, along with the increase in the employer's national insurance contribution, management are already looking at how this can be absorbed without undermining profitability. The decrease in gross profit has been mitigated by the control of operating costs and the continued business rates relief that was being received up until July. However, it has been impossible to mitigate the whole drop in year-on-year gross profit given the high levels of food turnover last year, and this has resulted in trading profit totaling £459,000 in the first half, a year-on-year drop of 61.5%. The observant amongst you will have noticed from the interim report that the department stores and travel combined have made a trading loss of £459,000 in the first half, clearly indicating the risk that these businesses are currently presenting to the society. While the trading losses from travel and department stores are lower than the same time last year, the risk that they are presenting should not be underestimated. The interim report shows an exceptional income of £231,000. This relates to the proceeds of the sale of our Mountbatten food store earlier this year, which completed in February, and the release of the provision that has been built up over the last few years for the rent at Braintree Quadrant. At the net profit, or profit before distributions level, the Society recorded a level of profit at £542,000, a level £544,000, or 80.09% lower than last year, which was of course an exceptional year. The Society is still on paper showing no debt, which is the result of the government grants and the lower capital investment due to the pandemic affecting some of our plans. It is anticipated the level of debt will return to more normal levels as we invest in the business over the coming year. The value of members' funds has fallen on last year from £17,636,000 to £13,659,000, reflecting the £3.9 million impairment of the freehold property at 220 Molsham Street at the year end, January 2021. The value of the Society's reserves has decreased on last year from £8,160,000 to £4,478,000. Turning now to the business development in the first half of this year and some of our plans for the remainder of the year. Despite the ongoing impact of the pandemic, we have maintained focus on investing in our business for the future, albeit at lower levels. Not just in terms of the capital investment, but also in rebuilding our business back after being impacted by the pandemic. Our core business is food, and it is this business that underpins the Society's profitability, so it's only natural that this business will always stand out in terms of activity. In the first half, we have continued with the refurbishment programme of our food stores that we commenced in 2014. So far this year, Cressing Road in Braintree, Wickford and our store in Great Notley have all been refurbished, providing a much needed refreshed shopping experience for our members and customers in these stores. The final refurbishment planned for this year is our store in Hutton. There has also been a major investment in self-checkout units in the food estate this year, with the stores in Kings Road and Beehive Lane in Chelmsford, Danbury, Holbridge, all having had units installed in the first half. The initial figures show that in the main, where we install self-checkout in our stores, the service is being well received by customers with good utilisation of the units. There are plans to roll self-checkout out to further stores in the new year. Also in the first half, we embarked on our first home delivery trial in partnership with Snappy Shopper. The service, which is run out of our Kings Road store in Chelmsford and covers most of the city, has been well received by those that use the service, but still not as well used as we'd expected. However, in the coming weeks, we will be starting a second trial out of our Chalice Lane store in Braintree. It is believed that there is less competition in the market for instant delivery in Braintree than there is in Chelmsford, and that Braintree has the potential to outperform the Kings Road operation. At the AGM in May, I reported that the trial of body-worn cameras in 3 of our stores had been well received by our colleagues and had been deemed a success, with plans for the cameras to be rolled out across the entire food estate. I can now report to members that this rollout was completed in the first half of the year and has led to colleagues feeling much safer in stores. In a department store business, the focus of the team's attention has been working to introduce new brands to replace the choice lost by the failure of Arcadia. A selection of brands have been introduced in the first half, including Cavani menswear, Solo women's wear, Salus women's wear, Mudflower women's wear, Wrapped women's wear, and Breakburn men's and women's wear. The search for new brands to introduce into our stores continues and is seen as an ongoing exercise. One of the areas of the retail industry that has benefited massively from the pandemic has been online retail, with many businesses having been helped greatly by their ability to trade online. Late in 2020, the Society considered the options that online presented to the business, and in the first half, a great deal of work has been carried out to improve our online presence across our trading portfolio. In food, the partnership with Snappy Shopper has allowed us to enter the online and home delivery arena in a relatively low-cost way, using the technology platform of experts to offer this service to our members and customers. While the travel industry is still feeling the impact of the pandemic, we are convinced that the recovery will come and that we'll need to be able to offer our customers some online functionality. As such, we are currently working with a major tour operator to give our clients and members the ability to book holidays online. I anticipate that we should be able to launch this in early 2022 at the latest. In our funeral business, trading online is not really an option given the nature of the business. So instead, we are using online to help make the process of arranging a funeral easier. As such, earlier this year we launched online floristry, giving our clients and their friends and families the ability to order their floral tributes online from the comfort of their own home. In the coming weeks, we hope to launch functionality on our website that enables prospective clients to obtain estimates for a funeral, which gives full transparency of prices. In our department store business, work is being undertaken to launch several of our departments online, with the ability for customers outside of our trading area to benefit from the ranges that we stock in store. The final development online is the members portal, where members will be able to access their account, check their personal details, check their points and dividend balance, donate points to charity, and access member-only offers to add further value to the membership proposition. The portal will be tried initially with colleagues before being extended to members later this year. In our funeral business, there are plans to open a new funeral branch later this year, in an Essex town that is not currently serviced by Chelmsford Star's funeral business, which will be the first expansion for funerals outside of our heartland since 2013. Finally, after many years of running our Charity of the Year scheme, the Society has decided that while it has supported many charities over the life of the scheme, that it wished to have a wider impact within the community. The decision was taken earlier this year to bring the Charity of the Year scheme to an end and instead form the Chelmsford Star Community Fund. The Community Fund will ensure that the Society can help more deserving causes each year, rather than just the one under the Charity of the Year scheme. Keep an eye on our website for news of those causes that will benefit in the coming months and years. I hope that you find this trading update informative, and all being well, I look forward to seeing you in person next May for our annual general meeting.